What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is December 16th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to do a really important update when it comes to Bitcoin's price, as we've hit new all-time highs here at around 106,500. But beyond that as well, I want to spend some time to talk about the major flush out we had in altcoins back last Monday, as we predicted, an over 20% correction within an hour or two, but we saw basically a close of 14% down. I want to talk about what this means for altcoins and what you need to watch for going forward. But beyond all that as well, we also got some key altcoins we're going to talk about, and also some trends in the macro markets, talking about what's going on in equities and more. We've got a lot to unpack here in today's video. If you happen to enjoy it, consider dropping a like, and you guys will have to be patient with me here today. My camera is not working, so instead of focusing on my face, let's focus on what really matters. We're going to focus on the charts. There we go. Let's go ahead and kick things off, guys. First off, I wanted to go ahead and talk about the price action. So as we kind of pointed out here for the last couple of weeks, we focused on what really drove a lot of this rally here, and that was mainly around the inflows from Microstrategy. And obviously the Bitcoin ETFs having one of their best months since back in, I think, January, maybe since January or February. But since then, we've been able to generally continue maintaining daily closes either in the 21-day pocket or above it. And so long as that happens, that means bulls are in charge, because essentially the 21 days continuously rising here, generally in sync with the price trend. And so long as we are holding above that, the bulls are in charge here. Now, again, for me, we're not so much focused here on longing Bitcoin, but rather using Bitcoin's optimism as a kind of lever for strength in the altcoin market. Again, before we dive into altcoins, I want to emphasize here that, again, week by week, we are looking at these numbers, taking a look at the ETF inflows as well as the inflows from the various Microstrategy BTC purchases through uses of convertible notes. And what we can see here is that while the ETF flows are looking phenomenal, we are only 2 weeks in, the data that we have at least to work with, 2 weeks into the month of December. And this is going into the holidays, mind you. We are very much on pace to reach the average we've had since back in October, November. I would say without a doubt that there's a more probable scenario that we're going to get in the 70K range here for the ETF inflows. That's really great news for Bitcoin. But beyond that as well, for the MicroStrategy equation, that's another big X factor that we need to consider here. I think that there is a good chance that we're not going to outperform the month of November. And the only reason I say that is because while MicroStrategy still seems like it's gun-ho here on, basically doing as many convertible note offerings as possible, we cannot deny the fact that the MicroStrategy premium, which was at its peak back in mid-November, a month later, is trading at much lower levels. To put this kind of in percentage terms, just to give a little bit of context, we're down about 32% here. So MicroStrategy doesn't have the liberty to essentially issue as many convertible notes as they could back then. And the premium is showing that. We're actually trading below the 21-day here. Not saying it's the end of the world, it just probably means that this is going to be a little bit less. So I don't expect as explosive of a month as we saw in November. I expect more of this kind of slow grind up here, up into maybe 110K over the next week or two. So long as, again, we're holding on that 21-day moving average. So long as that holds here, this can continue to trend higher into that low 110, 115K range. It's just going to keep on creeping up here as demand is outweighing existing sell-side supply in the market. The break in that 21-day is your cue to be very cautious and potentially start downsizing positions and look for a pullback, especially if we get below the 21-day and try to creep back up and we face resistance at it, essentially flipping the trend here. Then in that case, I would be looking for a retest here of the 100-day or 200-day pocket going into sometime in early Q1. But I wanted to go ahead, though, and talk about what this means for altcoins, because as Bitcoin has started to slow down, that lack of velocity in Bitcoin's price has obviously put a damper here on altcoins, not to mention altcoin dominance, which is what we're focusing on here. This is the others dominance. It's the measure of all altcoins in the market, or cryptos excluding the top 10 by market cap. We can see a huge flush out here, cutting down nearly half of the gains from this uptrend in a matter of just really was like about an hour or two. We had declined from around this kind of 12 percentage point range down here to around 10%, coming down to the 200-day moving average. Now, as we talked about actually within the Dash Report Alerts group, I sent out a video or market update basically talking about the fact that this is likely going to continue rolling over, or at a minimum, it's not going to continue trending higher for the next week or two. And the reason I talked about this is because not only has historically this been the case, but when you have these big flush outs that are caused by open interest getting to absorbent levels, put it in really simple terms, it means that a lot of people were trading on leverage and borrowed capital. Trading on 3, 5, 10x margin. They think that, I'm not doing 50 or 100x leverage. I'm not going to get liquidated. To the moon, the numbers are going to continuously go up as they have over the last couple of weeks. The exchanges have a huge incentive to just wipe those traders out. And unfortunately, a lot of people get caught in that. They lose everything, when in reality, if they just would have traded spot, they'd be okay. But again, that's the name of the game here. Exchanges have an incentive to liquidate their own users, which is a fundamental reality you need to keep in mind here when trying to trade with leverage, that the exchanges will work against you. Essentially, though, we set in a lower relative high as predicted, and this is trying to hold on the 21-day or maybe here the 200-week. I would say there's a good chance we come back down here into this pocket between the 200-day and the 100-day. And that means that altcoins are maybe in dollar terms going to hold where they're at, but I don't see them really accelerating that much as Bitcoin has started to slow down in its momentum to the upside. Not to mention, we do run the risk of a Bitcoin correction the longer we go here. So the fact that dominance is waning here makes me believe that there's going to be some good dip buying opportunities in the altcoin space, but I'm going to be looking for strong plays. So as I'm kind of looking here at this pullback, again, it's not the end of the world, but as we probably will break the 21-day, I'm looking for some entrance here as market cap potentially revisits this $300 billion range. If we get that, that is going to be phenomenal. That was prior support in the past, turned resistance. It can be turned support once again. And within that 100-day moving average, that would be a beautiful entry opportunity, in my opinion, for altcoins to potentially have that additional expansion in the event that Bitcoin is able to continue maintaining the bulk of its trend. If we get that, that's where I'm going to start looking at some altcoin setups. So let's go ahead and scan the market. What are the plays that are looking good right now? Well, I have to tell you guys, at least at the moment, I would not be buying the large cap plays. I wouldn't be buying Solana and Ethereum, obviously due to a lack of markets of scale potential because these plays are just so big. But beyond that as well, these plays have been continuing to bleed against Bitcoin. So they're not showcasing leadership at the moment. They're not holding up with Bitcoin, and they certainly aren't outpacing it. So essentially, Solana's back down to its June lows against Bitcoin, roughly speaking, or the same point it was at back here in January 2024. It's not terrible, right? It's keeping up with Bitcoin, but it's not maybe over the last, say, 9 months or so, right? I'm just coming up on it here in a year now. But at the same time, in the short term, this is continuing to bleed in. Unless this is getting above the 21-day and making support on it, I'm not touching it. Same goes here with Ethereum. Ethereum's trying to hold on the 21-day here, but unfortunately, that 100-day has just not been playing favor to Ethereum here, which showcases that any rally here is being used for opportunities of distribution. The Solana chart here just screams institutional insiders who bought a lot of the Solana back during the FTX bankruptcy, have so much supply they don't know what to do with. They're just going to go ahead and distribute it up here, sell it for much higher than what they bought it at. That's kind of been the play, I think, for a long time here in Solana. And I think Ethereum, while I know a lot of people are excited that it's back up towards the $3,500, $4,000 range in dollar terms, it's looking good in dollar terms, it's really not keeping up with Bitcoin. It's just where basically Bitcoin's been since back in October. So I would, again, be really wary here. If we can't get above these moving averages, this 100-day pocket, I would steer clear of it personally. A lot of the other, DePIN or AI-related plays, one of the strong narratives in this cycle, are still struggling. They had a great run up here from early November here to early December, so a nice month of price action. But since then, have struggled to hold. They did not hold. In this case, we're looking at Render against this Bitcoin pairing is not holding on the 200-day. In fact, it treated as resistance. We're going to try to see if it can hold on 100-day. If it doesn't, I don't see why this can't fall back down here to 7,000 sats, or essentially another good 15, 20% correction down into this range. I think that that's very doable when it comes to Render's price, and that could be maybe a good entry opportunity, kind of buying on the lower band here of previous price support in the past from August and here in November. But again, at the end of the day, I like to buy strength that's holding on the 21-day. And right now, we're just not doing that, which means we've got some more pain to come. Take a look here at Fetch as well, struggling at the 200-day, same exact situation as back here in June and here in September 2024. Couldn't hold on the dip to the 21-day. Again, this emphasized point on these big flushes, they really stunt the momentum because they liquidate a ton of people. They dry up liquidity from the markets. The exchanges walk away with a big pile of money, and that really kills sentiment for a little while in altcoins. So I would be looking for this to come back down the 200 week. And if we get it down there, then that might be an interesting opportunity if you're looking to kind of buy the dip, or you can wait for a break of the 21 day again and try trading it up. But again, a lot of these plays, you're starting to really see signs here across the market that there's so much dilution in altcoins. There's so many altcoins in circulation that you're not going to find easy plays that do 10, 20, 30 X's, especially these multi-billion-dollar plays. I take Dogecoin for example. This was, again, one of the large caps that had a really phenomenal rally here, more than doubled against Bitcoin here within a very short window of time. But since back in November, we've kind of said to steer clear from these plays. Do not buy these large caps that have already had their rallies, because at the end of the day, that's just going to leave you being a bag holder. Look at this clear distribution pattern, giving people hope that there's going to be essentially a breakout every single time. Fade, fade, fade. Break through the 21 day. This tells me that at a minimum we're going down to the 200 week. That would be maybe where some buyers will come in. I think there's a good chance that we don't hold there, and maybe just again continue to bleed out against Bitcoin for the foreseeable future. Until I see some price strength, I'm not touching Dogecoin. This also goes for a lot of meme coins out there. I think I've got a couple ones here. We got Pepe that we're also keeping on our radar and stuff that got recent listings. Again, you're going to find a lot of plays breaking through their 21 days, not holding. That means the next set of moving averages is going to be the 100-day or 200-day pocket, with the exception of some of the longer-term plays like Doge being more on the 200-week pocket. But the one area that is looking quite nice, that right now has at least still stayed above the 21-day on most plays in its respected sector, and has had a really great breakout in the later part of November, early December, is DeFi. Now, as much as I like DeFi as it is one of the stronger fundamental narratives, I try to put that aside and really focus on price action. And when I look at price action, I see that these are the plays that look like they've got some more room to go, considering where they've been in the past, right? They have a lot of price history here to work with, and they've been at much higher levels before. That being said, since they have really been pulling back since 2021, we've had lower highs. So I'm definitely still keeping that in mind. Nonetheless, we've got the potential for price to continue expanding higher. Compound, so it was Uniswap we looked at here. This is Compound, which is still well above the 21 day. It's still a nice fade here from those prior highs, coming here towards around the mid 900 sat range, potentially, or maybe 900,000 Satoshis or 90,000. But generally speaking, nice pullback here, potentially holding on that 21 day. If that holds, this could spring up quite high as well alongside Union and other plays. This is just bled out against Bitcoin over the last couple of years. So a lot of price action work with some levels that could be retested over the next couple of months. And Aave really showing up to the plate here. I mean, since back here in June, this has been up nearly 3x. Right? And looking for this, I probably wouldn't be trying to chase this up here at the 200 week. That's pretty heavy resistance, right? It's prior support in the past, being treated as resistance. Big spread between the moving averages. If you get this down at the 21 day, I would watch that for a short-term trade and a continued rally higher, because Aave is one of the leading DeFi protocols at the end of the day. And these protocols have some pretty strong fundamentals in regards to the demand that's currently existing on those protocols for lending and borrowing, the core use cases. But again, above all, you can obviously track these large cap plays. I think these are kind of safe plays where you could find, even just trading spot without leverage, you could find plays that over the next month could do 50, 100% moves. I think realistically, some of those might be in the cards considering continued strength in Bitcoin. But there are also some other smaller cap plays that are developing plays in the space that you should keep an eye on. One of them is the app called Lens. Lens is a protocol that allows you to do a wide range of different DeFi activities, like cross-chain native swaps between native ETH and Bitcoin, as well as a whole range of different currencies and stablecoins. But along that as well, you can obviously earn by lending your crypto across many different asset classes within the crypto space. And outside of that as well, there's the loan capacity within the protocol that allows you to take peer-to-peer loans. This is a big feature set that just recently launched with Lens, which has been around for some time in the crypto space, but has continued to innovate within DeFi over the last couple of years. And this new feature of peer-to-peer lending, which is going to have built-in order book functionality, allowing for people to have fixed rate lending when that comes to lending their own capital, but also on the other receiving end, people who are borrowing capital having clear fixed terms rather than variable rate rates of interest, both for lenders and borrowers. This is a huge feature set, and I think that this is going to be very important as we're talking about traditional finance stepping into the crypto space. But definitely keep an eye on Lens. They're one of our partners here in the channel. And another partner of ours is Elys Network. Now, Elys Network is focused on being this kind of all-in-one liquidity layer that allows you to tap into a lot of the major ecosystems within crypto. They've boasted over 2.4 million unique wallets and around 50,000 daily active users on the protocol. But Elys Network recently did a raise on Republic, which is an equity crowdfunding platform, because they, at the end of the day, are trying to build something really big and they want to be a community-centered project. They're going to have the feature of spot trading, perpetual trading, the ability to obviously do liquid staking, but also liquidity mining, and of course, manage and leverage LP positions. So this will allow you to interact across a variety of feature sets, from swaps to lending and a whole range of other things, perpetual trading across the Ethereum network, as well as Cosmos and a whole range of other ecosystems, all from within one single protocol and decentralized application. So I definitely think you guys should check out Elys as well. This is also another really powerful emerging DeFi play that you should keep on your radar, and it taps into a lot of the well-established ecosystems in crypto. But if you want to take a dive into this, guys, I'll leave some links down below in the description. These are great projects to keep an eye on. And again, they're partnered on the channel for a reason. We like what they're building. I think they've got a lot to offer. But I wanted to go ahead here and dive into the macro scene here, talking about what's going on with equities, because there is a lot to keep on your radar when it comes to what's going on in the stock market. And even if you're not trading stocks, it is imperative to keep an eye on these things, because they will also tell us about the story of what's set to happen in crypto. If equities are not showing strength, there's a good chance crypto is going to get hit as well. They are all, at the end of the day, risk-on assets. We can say Bitcoin is this, alternative to gold. It's a hedging asset. At the end of the day, assets tend to move in tandem to a large extent. So if we're not seeing positive signs in equities, and if we're starting to see, in fact, on the counter opposite, we're starting to see essentially weakness within equities, we need to be prepared. And we need to know what to look out for, and obviously understand what that's going to mean for crypto. So right now, I wanted to start here by talking about the SMH ETF. This is the VanEck Semiconductor ETF. There are, of course, a couple other ones. There's SOX as well. Doesn't really matter. You're going to see generally the same chart here that essentially since back in around July 2024, we really had the peak in semiconductors. We have been since then stalling and going sideways throughout a good chunk of 2024, the majority of 2024 by this point, right? We've been generally pushing sideways here since back here in March of 2024, albeit we're just slightly higher from that relative high. So my point here is that this is one of the market leader sectors here. This is really one of the best places to be exposed when it comes to the AI narrative, generally speaking. Well, if we're starting to see a stagnation here in one of the market leading narratives, and markets are starting to feel maybe markets are no longer in a position where we can start pricing equities higher off of higher growth expectations, more demand for AI. Perhaps we're hitting a point where that growth vertical here is starting to slow down. Then that can be really bad for the broader equity markets, right? Unless we start to see leadership show up elsewhere, right? We're seeing NVIDIA spending a lot of time over the last 2 weeks below that 21-day, multiple failed attempts to be able to hold in that 21-day over the last couple of months. Every time they're either failing to really trend higher and breaking down below, or having an inability to even get really back above that 21-day. This to me signals that the market is top heavy right now. It's overbought, and that we could very well, especially seeing how close we are to the 100 and 200-day, we can not only test those moving averages, which now with NVIDIA being a $3 trillion company, is going to put pressure on markets. It's a lot of equity value diminishing. But I think we could easily snap to that 200-day. And beyond that, the 200-week is all the way down here at $57 a share. To put that in perspective, NVIDIA was only at that price back here in January 2024, right? That was the last time we were there. Now, I'm not saying we have to go all the way down there, but I will say that we could go down to one of these prior levels, like the one back here in August, around $91. We could go here at the lows, $76 back in April, right? And there are a lot of gaps to get filled. There's the gap here, for example, at $69 back from February 2024, right? There is a whole range of big gaps here that could easily get filled. And I don't think we're going to come down here and test these levels or anything like that. but I do believe that this one is screaming as a potential point where prices could go to. And that's going to throw off market participants going from $150 a share down here to around 69. Right? That's more than a 50% pullback, but that is not out of the question after NVIDIA has had these 1,000% rallies in price, 1,200%, 1,000% in this case. If we take it to the absolute highs here, this was 1,300%. It's right in line with the line of resistance. Wouldn't be a big shocker. We've seen these kind of corrections before. So I think that that is something that could really play out here over the next couple of weeks. Not in the next couple of weeks, next couple of months. And that could spell really bad news, obviously, for semiconductor stocks as a whole, but equities, the whole stock market, and it also could spell really bad for what's going on in crypto. There's a very close correlation here with the optimism around AI and the purely speculative and non-revenue generating assets like cryptocurrencies. Right? Because if there is an excess amount of liquidity, an excess amount of valuation, markets are holding up great in equities, that's going to have a secondary positive effect for crypto and vice versa. If we start to see equities flushing down, people are no longer wealthy than they thought they were, you see less speculative kind of behaviors and you see a dry up of volume and liquidity in equities. You see this as well in AMD. AMD topped out back in March 2024 at $226, now down $126. Looks like it could easily come back like it did in 2022 into the 200-week pocket in between the 100-month and come down to about $100 a share, right? Maybe then we could start to look for some really great value opportunities to buy semiconductor shares. But right now, I think the trend is just clear. The 21 days acting as resistance, it's not looking good. Now, the broader market here, this is also the big picture here that I want you guys to keep in mind. We've got what's going on in equity markets right now. And essentially, if we don't hold in the 21-day here, I would get really concerned because we not only have some big gaps that could get filled here in the short term. The 100 days creeping up here right in alignment with that huge gap on November 5th after the election results came in. But beyond that, that will mean that we'll deviate back below the line of prior resistance of the last 95 years that was broken. And that would be the deviation setup trade that essentially could lead us coming down to the 100-day, failing to break out and actually having a severe correction in markets. So I want you guys to be on high alert about that. We need to continue holding this 21-day until we get some wiggle room, essentially, where we could break the 21-day but not break this line of resistance here, of prior resistance, right? So we can at least whipsaw higher and continue trending into 2026. I hear a lot of talk about people saying, oh, the bear market's going to come in late 2025. It's going to come in 2026. I'm not saying that that can't be the play here, but when I hear enough people talking about that with confidence in order to justify more risk-taking in the market, that's when I get concerned. I only say that, I know some of you might believe that. I'm open to the possibility that could be the case, but if I don't see it showing up in the moving averages, and especially if we break down below this line of resistance, especially if that starts acting as resistance itself, I'm going to be really concerned. I'm going to be very concerned for the state of equities and also for crypto as well. So just sharing that in full honesty. So far, volatility is still muted right now. We're going to wait for a break above the 21-day and the 200-day here. That would be where I'd start to get a little bit concerned and maybe get back into cash to some extent. But so far, so good. Volatility is still low. We've started to see a lot of the yield curve measurements. There are two major ones that we'll talk about. The 10-year minus the 2-year yield now is reaccelerating back up. Again, the inversion of the yield curve, generally a forward signal towards potential recession in the next couple of months. We also have as well the 2-year yield minus the 3-month yield. In this case, again, seeing a massive reacceleration since back in September and another big jump up here in the first week of December, or excuse me, the second week of December. So as we get above these moving averages here, that's where I would say to keep your eye on the prize here, because that's when things could really start to get shaky when it comes to essentially a potential for a recession in the markets. And another thing as well that signals recessionary pressures, I understand this obviously helps in the fight against inflation, but essentially the price of oil right now is trading about $70 a barrel. We've continued to treat the 100-day as resistance since back in July. Those purple lines here have been weighing down price. And the 100-month is now acting as resistance here since back here in September, albeit with an exception here in October. But again, we weren't able to hold. We broke back down. So essentially, if I take a look at this on the weekly time frame, right, I gotta tell you guys, this is the worst oil has looked in a while. It looks like we're destined for some kind of flush down to, $60 to $50 a barrel. And that to me sends forewarnings of a potential recession. It's going to at least put a big dent in energy stocks, which is again, it's going to be another potential weight on equity markets. It's trillions of dollars of value. So you mix that with declining semiconductor demand. All these things are pointing, in my opinion, from what I can see, that essentially we're going to see a weakness in the economy potentially going into 2025, right? I'm not saying that is fully solidified. Things could change here, but we need to keep an eye on those moving averages, because if this revisits back to the lows, there are only so many times this can continue to hold here, right? And we have to really keep an eye on all these different factors, because they will help us to understand where markets are heading over the next couple of months. But that's it in regards to the core content update, guys. I just wanted to let you know these are the main things we're watching for here. I know a lot of people are really excited about Bitcoin and altcoins, but again, we cannot lose that macro perspective as well. It's going to give you a lot of insight into where things are heading. And again, keep it simple. Focus on those moving averages here, guys. We're going to continue to cover it here on this channel. We're going to keep you guys focused and kind of updated on all the really interesting plays we see in the market, the new emerging narratives. But at the end of the day, these basic principles, you can just see the 21-day. If you just let 21-day lead, this has basically helped you know when to take risk in the market here. And that was after multiple months of stagnation here. When we couldn't hold the 21-day, it's cool. You just close your positions and you would have avoided all this downside, this downside, this downside, this downside, and also back here as well. 21 days is your friend. That's our major momentum indicator. So I hope you guys have a phenomenal rest of your day. Thank you all so much for tuning in as always. I hope you all did not miss my face. I know I certainly don't. But I hope you guys are having a phenomenal rest of your day wherever you are. And hopefully I'll see you guys later on this week. If not, I'll see you guys right back here on Monday next week. Take care, everyone.